Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, February 4th, 2009. Well, as we get into today's action, guys, I want to discuss the levels as we always do in these videos, discuss support resistance points, how the key trend lines are drawn, educate you guys as best as I can. I also want to discuss a little bit about what's going on in the market today. We are seeing the market in a mixed standpoint right now. Now, that wasn't the case earlier. Earlier, we did see the markets up across the board very nicely. Since then, we've seen a nice little bit of a dip in the markets from the highs. Now, the highs happen to coincide with a key trend line, and you guys can see that one right up here. Look at how perfect that was as it pierced that high. Now, you have pulled back off of that level pretty nicely with the Dow down about 25 points now, the S&P up about 3, and the NASDAQ trading, about 15 points higher right now. Now, one thing you are seeing intraday, and while we do this video live, is the market actually piercing this key level down here. This level is gotten from the high point of yesterday. So that is support. Now, we gapped below that level this morning and actually sold off to this key level down here. And then at that point, you got a bounce in the market. We rallied. We broke the 200 moving average, made a move all the way up to this key resistance level. And that was a great shorting opportunity, I must say, for this market. And then ever since then, you've kind of dribbled down. You've begun to accelerate your downward motion here in the last couple candles on your 10-minute chart intraday SPY. But the key again is you're going to have support right at the 200 moving average coming into play very shortly, even if this can't hold here. And it could still hold. You're still intra-candle. You still have about 7 minutes, 6 minutes left in this candle. So let's just choreograph what happened. So the number one level here, guys, and this is going to mirror on the 60-minute when I show you the 60-minute as well, was this 200 moving average. All right, we knew yesterday after we hit it that was a good shorting opportunity. We called that out as always and posted it on the blog. But the idea here was that you got that pullback. Today you gapped up a little bit, pulled back, filled the gap, and then raced higher, breaking that 200 to the upside to this trend line. At that point, you really started to trade sideways for a little bit, thinking about maybe breaking up, and this consolidation early in the day could have been mistook for that. But ultimately, the market was just too tired hitting this key level up here and started to fade down to the 20 moving average. Gave a little bit of a bear flag. Notice the sideways to slightly higher move with the 20 moving average. Broke down through the 20 next. Then gave another bearish flag pattern right up back into the 20, and then is now breaking down a little bit more. But notice this level here. I drew this pink line in. That's the support line right there, and you can see the market's really hovering right on top of that right now. That is a key level. After that, you'll have this 200 moving average. Then after that, you have the 50 moving average in white, along with this line and this upsloping line, which is connecting from this point to the bottoms over here and up. This will be a very significant line, this trend line right here, okay? So really focus on that one once the market hits that point, which it probably will. Again, those of you that are with us in the premium service in the research center at InTheMoneyStocks.com, you know our projections over the next couple days, so you can understand what we're talking about a little bit. Now, just a quick side note, guys. We do have a webinar this weekend where we go into all the hardcore technical analysis stuff that we teach, educating all those that take it in some of our proprietary techniques on how to understand which way the market's going to go, which way it's going to pivot, all the key stuff that you will need to make yourself a profitable, exemplary trader will be in that webinar. You'll talk to the pro trader, chief market strategist live, who's giving the seminar, the webinar online, and you'll see all his slides on your screen. So it's really nicely taken care of. All right, so join it in themoneystocks.com under seminars, webinars, education. Okay, now let's go back to the 60-minute, guys, and I just want to point this out. You see the bounce you're getting right off of this level? That's trying to get back above that support line. You're really right on it right now. You are getting a little bit of a bounce. Now, the 60 minutes a key level, guys. I have my levels drawn in from the last couple days on this chart, and you can see how imperative this line was. And I called this out in the research center. Those of you that are the premium subscribers know how much I harped on this level. I even talked about a gap down here on Monday being a buying opportunity, and I said that I'd be a buyer of this market on that gap down, and sure enough, it gapped down on Monday, and then you got a great reversal, and the rest is history as the market has continued higher here. Now, as of yesterday, I'd mentioned that I had been out of that market, but, that was right into this 50 moving average on a swing trade, short swing trade basis, and that was the right decision. Even though you have gone a little higher here, you're now retracing back down to that level, and notice that, please, all right? So here's the line, guys. Here's your 50 moving average on that level. This is where we hit the high yesterday. It also coincided on my 10-minute with the 200 moving average right here. That's the same point on the chart. Let's flip back to that. So this level was very key. You broke it this morning, but it's getting a little too long in the tooth. Notice how far you've come up now, right? You've basically gone from this point all the way up to here in a matter of, a day and a half, or half a day if you would, of talking about market time. In tune with that, you came right into that resistance level on this, which was a line, and this is why it's so important to match up all your time frames, because on the 60-minute, you don't necessarily know you have a key level there. Now, granted, I could tell you right here there is a level, and I'm going to draw it in right there. Alright, there's your level right here coinciding with this point right here and this point right over here. Alright, so there actually is a level, but let's say you didn't know that. At least you have one level on your 10-minute chart telling you that there is a level there and you should be selling into that. Alright, but just to show you where this level is coming from, just draw your line straight across from this point all the way to this little gap window area right over here, and just extend that, alright? And that's your level right there, which is why you stopped on the 60-minute. Now look at the pullback you've had. You've had a 1, 2, 3 pullback. Where do you go? Right back to your breakout point at your 50 moving average. That's a very good support level as well right here, and notice how it's also coinciding with this point and the 200 moving average right in this range as well on that chart. Okay, so it's again all about lining things up, putting the odds in your favor by matching things up as best you can. Alright, now just to touch on a couple other odds and ends here, what I am seeing is you want to see if you can consolidate here on this 50 moving average. If you do and you trade sideways for a couple candles, you might be able to get a little bit of a break back up and retest this high, but again, I don't think that necessarily will happen. Alright, I think this market needs to come in a little more, but again, anything is possible. You are on support and need to be realized there at that support line, and you can see you're getting a little bit more of a bounce on this market right now currently, and notice that, see that little wick now? You're back above that key level on this market. So keep an eye on those levels, guys. They're going to work for you. They always work for us, and great stuff. Alright, again, guys, just a couple other odds and ends. I'm looking down my chart here about my watch list, and I am seeing Goldman today up about $6, just under $6 on Goldman. Let's take a look at that Goldman. Now, those of you that have been watching the videos from last week, I actually called this point on the buy price for Goldman, and it was an amazing buy price. And you can easily tell, this is your 60-minute channel on Goldman, or your chart on Goldman Sachs. And notice the gap up. You started to pull back. This is where I said, guys, I think this is going right to this necktie. And look at that, the 50 and the 200 necktie. It's also gap fill right here. Absolutely fantastic buying opportunity on Goldman. And look at where you are from there, that point on. Again, just to note, that also coincided on my SPY chart on the 60-minute with this hit right here down at the trend line as well. And as soon as Goldman got a bid, then this market started to take off to the upside. Alright, so that's very, very important. But in any case, folks, I do encourage you all to come join the Research Center at InTheMoneyStocks.com to get videos, educational analysis, market reports, picks, nice little move on the hidden gem today to the upside, so that's good, and much, much more. Also, join the webinar, guys. Go sign up so you get a spot in that webinar. We'll email you the instructions and so forth for that on Saturday. Again, Saturday, February 7th from 1 p.m. to 6 p.m. on Saturday. Get ready for hardcore technicals. If you're interested in this stuff, there's no other place to be on Saturday. Take care, guys. We'll see you there. Bye.